Hi all, hope everyone is doing well. Welcome back to Plant-Based Portfolio, where we explore all things related to investing and trading plant-based stocks. We help you put your money where your mouth is and invest healthily in companies that align with your values. In this video we will be breaking down the TTCF Q3 2021 earnings report. We will explore the quarterly performance compared with estimates, examine the financial statements, and review the chart. Then, we will peruse commentary from the CEO, look at the forward guidance, and end with our final thoughts. Be sure to watch the video through the end where we share one of our favorite metrics to evaluate plant-based food stocks. Before we start, please go ahead and smash that like button to let the YouTube algorithm know that you love this kind of content. Subscribe and click the notification bell to catch the latest videos. Thank you. Now, let's drill into it. In Q3 2021, TTCF, ticker symbol TTCF, pulled in $58.8 million in revenue, missing estimates by 8%. EPS came in at minus 10 cents, missing estimates by 4 cents. A double miss is doubly bad for TTCF. Moving over to the earnings report, starting with the highlights. Let's look at the 9-month data. Revenue of $162 million was an increase of 49% year over year. Gross profit was $21.7 million with a gross profit margin of 13%. Net loss amounted to $70.1 million. Revenue growth is strong though losses continue to pile up. Okay, moving to the operating statement. Again, let's view 9-month data. Gross profit grew about 25% year over year, despite gross margins decreasing from 16% in 2020 to 13% in 2021. Here we can see the challenge of inflation and rising commodity prices. Unfortunately, the operating expenses are not broken out here, so it is difficult to ascertain what TTCF is spending on. What we do know is that the operating expenses have increased more than 250% from 2020 to 2021. The net loss of $70.1 million in Q3 2021 is a worsening year-over-year net loss of over 2,100%. Sheesh mech jeesh. That is a massive loss. Now for the balance sheet. Here we see $268 million of total assets with $129 million in cash. Assets outweigh the $42 million in liabilities. This balance sheet is not horrible. TTCF does not seem to have a cash flow statement. Red flag. Now let's see what CEO Sam Galletti has to say. We are pleased with our third quarter results with record revenue driven by our TTCF branded products, said Sam Galletti, President and CEO of TTCF. TTCF is now a top 10 brand across the club, grocery and mass channels in the categories in which we compete. Our branded products are now in over 13,000 stores nationwide as we have executed on our plan to diversify both channel and customer mix. Looking ahead, we believe we are well positioned to execute on our growth strategy with tremendous momentum entering 2022 and beyond. So this does not seem very helpful. No explanation of why operating costs have jumped 250%. No discussion of specific plans to reduce costs. As far as full year 2021 guidance, TTCF expects revenue in the range of $210 million to $215 million, which would be a 45% year-over-year growth rate at best. They also expect gross margins to stay between 12% and 14%. Jumping to the year-to-date chart, we see that the price has been trending down from a 52-week high of about $27.80 per share to a low of about $14.09. In the hours after earnings, the share price has been somewhat volatile. Zooming out to the 5-year chart, we have broken through the $16 support and see that the next support is around $15 per share. Looking at the cash conversion cycle, we see that it took 41 days for TTCF to get paid by their customers, 88 days for inventory to be sold, and 46 days for TTCF to pay their suppliers. This results in a cash conversion cycle of 84 days. Remember, the lower the cash conversion cycle value, the better, as it indicates fast turnover in the business cycle. Looking at TTCF's cash conversion cycle over the past few years, we see that the trend is indeed increasing. Final thoughts. Tattooed Chef's revenue growth is strong at 49% year-over-year on a 9-month period basis. This, along with a relatively moderate cash conversion cycle value, indicate that Tattooed Chef has found decent product market fit, with customers loving the products and driving sales. However, rising costs, which are obscured and not transparent, are a big issue. Additionally, without having a cash flow statement, investors like us cannot accurately assess the company's fundamentals. It is likely that Tattooed Chef is dealing with the same challenges plaguing the plant-based food industry, including rising costs related to wages, commodity inflation, and logistical delays. Those concerns, along with the news that CEO Sam Galletti has registered to sell 39 million shares of Tattooed Chef, definitely works to diminish investor confidence in the company and leadership. So, can Tattooed Chef finish 2021 strong? Maybe, but the near-term future of the company is opaque. Many thanks for watching. We hope you enjoyed this video and found it helpful and informative. If so, please subscribe, like, share, and comment below. We would love to hear your thoughts on Tattooed Chef, their earnings, and plant-based stocks. Join us in the next video, and don't forget to put your money where your mouth is, and invest healthily.